Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for December 16th, 2013. This week I'm going to talk a little bit about the process that I go through each trading day to find the hot stocks for day and swing trading. Now, the majority of hot stocks will start their daily move in the first hour. I would say that 80% of the stocks that I trade each day are found in that first hour, and the rest are found throughout the trading day. With powerful tools and efficient processes, you can find the stocks that meet the requirements of these Stockscores trading strategies. Now, some of the strategies are less time sensitive, and for those you can use the Stockscores.com market scan, which runs using delayed data. If you want to do some of the more time sensitive strategies, you'll need real-time data and analytical software like TradeStation. Now, I have written my own proprietary indicators for TradeStation, which emulate those used in Stockscores, but allow us to do that real-time market analysis to find those picks as quickly as possible. The Stockscores strategies and processes are taught in the Active Trader program. I'm not going to teach you those in this video. I'm just going to give you a rundown of how I go through those processes. If you would like more information on the Active Trader course, you can go to stockscores.com/learn, where there are some videos pertaining to that course material, and you can, of course, ask me questions at any time. I am now in TradeStation, where I will show you the processes that I do starting at about 2 minutes after the market opens. The first thing I use is just the simple scanner that is included with TradeStation. It's pretty good, but it misses out, or it gives you a lot of noise as well. So when I run this scan, I'm going to have a lot of stocks to look through, and therefore I need to whittle down that list by copying my results from the initial scan and pasting them in. And in my first step, I guess what I'm trying to do is eliminate those stocks that aren't very liquid. And I do that using number of trades. In TradeStation, you can actually follow the stocks that have a high number of trades and focus on those. I don't want to day trade or swing trade stocks that aren't very liquid, simply because it's going to be too difficult to move in and out of them. So I take this radar screen window and I sort it by number of trades, and I grab the most active stocks on the list. Now, I'm doing this after the market is closed, but in the morning, typically that list is going to be short. I then paste it into a second radar screen where I'm really just looking to calculate whether the volume is abnormal. And for that, I've created my own indicators. Now, Stockscores does this as well, but it doesn't do it in real time. And the nice thing about TradeStation is I can take that same math that we use in Stockscores, put it into TradeStation to look for those stocks trading statistically significant abnormal volume. And the simple reason is those stocks are the ones that have the best potential to go into market-beating trends. So for example, here's a stock that I traded this morning. I found it very shortly after the market opened, and what caught my eye was the fact that not only was it up, but it was trading abnormal volume. This is not something that comes with TradeStation. This is my own indicator, which I make available to my students, and it's really the thing that gives me an edge, the way that I can find these fast-moving hot stocks before most people. Now, that's how I create my day trader watch list. It's pretty similar with the process to find swing trades. And swing trades, of course, are stocks that we hold for a little bit longer with a little bit less time sensitivity. Again, I run my initial scan, and this particular scan looks for stocks that are up. I then look for those stocks that are fairly liquid again, so same second step. Here I'm not as picky about liquidity. I'm willing to take stocks that are less liquid, but still we want stocks that are fairly actively traded, simply because it makes it easier to move in and out of them. Now, the last step is I'm looking at a different time interval. I'm looking at a 13-minute interval for something called an action candle. An action candle is a opening candle of the day where the price and volume are both abnormal. And again, I have written specific indicators to calculate that, and simply I look for those stocks that are showing this action candle on whatever interval I'm looking at. Now, sometimes it's the first candle of the day, sometimes it's the second candle of the day, it could be the 10th candle of the day. I run this process throughout the day so that I can find those that are showing me that type of pattern. So here I'm again inside TradeStation looking at safe bulkers, and this thing is calculating again. It'll just take a moment here. Once it's calculated for this indicator, the chart will refresh and you will see a little purple dot on the candle, and that means that that candle is statistically significant abnormal mover. So here you can see that purple dot on safe bulkers. I look at the pattern, good pattern, I go in and buy it. So with TradeStation combined with my indicators, you can find these stocks very quickly. Now I can look in the same way using the Stockscores market scan. It's actually a lot simpler using the Stockscores market scan. It's just not real time. And so what that means is that we're going to catch them a little bit later. Not always a bad thing, because sometimes the signal can be stronger if you wait a little bit longer. But in most cases, you're going to get in at a little bit higher price, and that means your profitability isn't as good because you're not using real time. I can set up a scan in here just simply looking for stocks that are up on abnormal activity, like say abnormal day up, abnormal volume, breaking through 15-day resistance. I might run this scan early in the day with a minimum of 1,000 trades a day. Click on that, and it finds very quickly for me the 24 stocks that are doing what I've asked it to find. And most of these stocks were the ones that I was following today as I was doing my day trading. In fact, I bought both YRCW and Safe Bulkers. Now, if I click on SB, you'll see the chart. In this case, it's a daily chart. But if I wanted to see that intraday time frame, I could click on 15-day, make it a 13-minute chart, for example. And now you can see that same pattern that we were looking at in TradeStation. The difference here is that I found it in a much simpler process, but probably 15 minutes later, or maybe even 30 minutes later, than I might have found it using TradeStation. In this case, it didn't really matter. The price was more or less the same. But in some cases, you get real fast-moving stocks where you're going to get in a little bit later. Well, that's the process that I do in that first hour. And I've got a number of different strategies, probably 5 or 6, that I apply through certain times of the day using more or less the same processes that I've shown you today. The emphasis is always on finding the abnormal movers, and because I've got some tools that allow me to do that quicker and some very efficient processes to really narrow in on the hot stocks of the day, I can usually get to these stocks long before most of the public does. Now again, if you want more information on that, go to that page on Stockscores, that's stockscores.com/learn, and there's some videos on there that you can watch. All right, let's get into this week's analysis. Now, last week I had drawn the ascending triangle pattern, and my expectation was that we would come down to support at that that ascending triangle support line, the upward sloping green line that you see on the chart. The market stalled there for perhaps an hour, but ultimately blew down through that level, and it really tells us that there is an increasing amount of worry in what I would describe as a somewhat overbought U.S. stock market. Now, we've held support at the lows from late November, and you can see through Thursday and Friday we bounced off of that support level a number of times. But although the market is kind of oversold in a very short-term time frame, the selling over the last 3 days is pretty dramatic. I do think that there's a pretty real potential that will break that green line of support, that horizontal line of support that I've drawn. So I recommend some caution with the U.S. stock market. Watching the market every day, I really get a sense that the buyers are not all that enthusiastic. They are lacking motivation. A correction would be very good for the market as it would recharge buyer interest. Now the TSX also broke its, call it short-term optimism, early in December and has been in a downward sloping channel since then. We're at the bottom of the channel. That means we're a little bit oversold, but it also means that the downward action is likely to continue. So, big picture, and normally I would look at the big picture chart, but we've all know that the upward trend started a couple of months ago. And I think that upward trend continues looking out a couple of months. But in the very short term, I think more weakness is likely. We could see early next week a little bit of a bounce back because we are at the bottom of that downward sloping channel. But I think outside of a couple days, we're probably going to see some more weakness in the Canadian market as well. U.S. Treasuries are in a downward trend, but consolidating into a pennant pattern. Now, given that the trend into the pennant, and I've drawn the pennant with the falling top line, the red line on there, and then the rising bottoms, the green line, given that we're in a pennant, that's a neutral pattern actually, but the trend into the pennant was down, which means the expectation is that the move out of the pennant will be down. If we break the upside of the pennant, in other words, if price moves up through that red line, then I would say that bond prices are going higher, interest rates going lower. But at this point, I think we still remain on the negative side of neutral for the U.S. Treasury market, which implies higher interest rates are ahead. The Chinese market broke down this week from its sideways consolidation pattern that we talked about last week, and it implies lower prices ahead. Now again, this is a very short-term view. These are 30-day, 30-minute charts. So don't get too wrapped up in the short term unless you're a short-term trader. I would say that this is bearish short-term, but really more of a neutral to even slightly bullish chart longer term as the Chinese market is beginning its turnaround. The emerging markets, again, short-term bearishness because we are in a downward sloping channel. And until we break through the upper envelope of that channel, we should remain bearish. But if you look out at the daily or weekly charts, the emerging markets, they're not great, but they are at least neutral. So things are improving. US dollar has been moving sideways, or pardon me, moving lower over the past month or so, and I don't see any reason for that to stop. And that's actually bad for emerging markets, bad for China, which is perhaps one of the reasons why we see that those markets moving lower. It somewhat doesn't make sense that the US dollar is so weak when we hear about talk that tapering will begin from the US Fed, that maybe all of the printing of money is going to cease. You would expect that the US dollar would get stronger, but that's not been the case, and we have to follow what the chart tells us to do, and right now that is to be somewhat bearish on the US dollar. Gold is this little island attempt at reversal right here, which failed. You had a gap up, and then it went right back into the pennant pattern. Again, the trend into the pennant was down. So we've got a downward trend into the pennant. Then we've got a sideways consolidation. That means most likely we break down out of the pennant. So I would stay on the, I would call it bearish side on gold. But we are tickling the top of this, and we could try and get that break from the top of that pattern. Obviously, this island attempt at reversal there failed, but the market may give another chance. So right now I would be negative on gold, as we've been for some time, but gold keeps trying to break the downward trend. We've seen it over and over in the past few months. It keeps failing also, but one of these times it may actually succeed. So don't ever get too overzealous with buying gold stocks until we've got a number of confirmations on multiple time frames, but certainly things are trying to reverse in the gold market. Oil market broke down from a short-term head and shoulders pattern today. You can see the head right here in the middle, and shoulder neckline breakdown. That implies oil falls back into this trading range that it was in a couple of weeks ago. I'm neutral on oil. It's fallen back into its longer term trading range. Essentially, the premium that the market had been giving to oil because of conflict in the Middle East has been taken out of the market, and that means the market doesn't really care about what's going on in the Middle East anymore, and it now becomes a supply and demand question. And really, when you look at the fundamentals, the supply of oil is sort of outstripping demand these days, but the oil chart shows us that this is still a sideways market. The VIX has had a little perk up in the last few days with market weakness. You're seeing some money flow into options as insurance, and that causes the VIX index to go higher. This VIX is based on the S&P 500, which is the one most commonly used, and the ETF is VXX. Again, this chart, we've seen a number of blips along the way, but the blips here have been a little more substantial. So that points again to the potential for a pullback in the market. So I remain bullish long-term on US stocks, but neutral in the short term. And I do think there's a very real possibility we see further pullback in the US market. Canadian market is in the early stages of its bull market, but short term, there's some bearishness building there. Gold, bearish long-term, neutral short-term. Oil, neutral long-term, bearish short-term. Early signs of a correction are beginning to appear on the U.S. markets as they look toward a tapering of the Fed's bond buying program. The long-term outlook remains bullish, but further weakness in the SPY could lead to a 3 to 5% correction. Canadian markets remain in the early stage of an upward trend where momentum is slow to build, and that's really what we're seeing there, is that slow building of momentum that takes time to develop. All right, well, that's been the Stockscores Market Minutes for December 13th. Have a great week in the market and trade well.